Okay, guys, welcome. Friday, February 18th. We're going to talk about the stock market. We're going to look at some charts here. I'm going to just run through and do a stock blitz. But again, if you're new to the channel, I cover stock market, technical analysis, trade ideas. I try to point out things before they happen, so you have the opportunity to at least, analyze those for yourself. And that's really what this channel is all about. So leave me a thumbs up. And then if you're interested in kind of learning or building some technical analysis skills, take my course. The link is in the description below. And it's a $99 course for about 5-6 hours of instruction. Should really help you build on some technical analysis skills and some trading skills as well. All right, so moving on, let's start out with the triple Qs. Here's what we got going on. So on the daily chart, I'll flip over here. The things I just want to point out, bearish rising wedge. So you see the rising wedge right here. And I've got these horizontal lines all marked out as potential levels of support if we start to fall. But we have this bearish rising wedge pattern starting to break down. You can see, though, the dip buyers are really trying to fight. And they were fighting yesterday and fighting today as well. So we've broken down out of the pattern, the bearish rising wedge pattern, but it's not impulsive yet because the dip buyers are in there. And you can see big negative divergence on the daily right there on the RSI and the PPO. So that's signaling that a trend change is likely. And we're waiting for that break that break of support basically. And this is the break of support right here. It's just not impulsive yet. I want to see the dip buyers kind of lose the battle basically, because it's a battleground right now. Dip buyers are trying to, bulls are basically trying to recover this broken support. Bears are trying to push this thing down. So looking at the hourly right here, you can see this is the dip buyers. Yesterday we broke down, dip buyers stepped in, bid it back up to support. Today, gap down, dip buyers stepping in. So, we have to wait to see, it'll be a change in character if we see this thing sell off into the close. I continue to look for that, and if the dip buyers continue to bid it back up and recover, that's a pretty big recovery, but they could do it, recover it all the way back up to here, then there's no sell signal. So until we see that changing character where we break down, and then the dip buyers step in, and then it rolls over. That's what I'm looking for. Until we see that, we don't have that solid sell signal yet. Moving on to the SPY, we'll start out here on the daily. On the SPY, bearish rising wedge outlined here in green. The lower trend line of this bearish rising wedge comes off the March 2020 lows. All right. And as you can see, this was a sell signal the other day, or, weeks ago or whatever. And then we did this full back test. And then really you can see we did the back test, and all we've been doing for almost 2 weeks now is just kind of going nowhere, just sideways basically. So we break down, the dip buyers step in. It's a battleground right now. So we're trying to figure out where the next move is. Until we get that sell signal in Qs, this obviously could just be a bull flag. We could just be kind of hanging out, flagging out for an impulsive break to the upside. Or we could be breaking down. So there's no actionable trade yet, but we're watching the charts. On the hourly chart, you can see same thing. Yesterday, break down, buy the dip. Break down, buy the dip. That's what's going on right now. So until we see a change in that character, that is still there. And for anybody that's new, though, we are what I have charted out as long-term resistance, and this is coming off on a weekly chart on the S&P 500. So every candle here is 1 week. This is going back to 2009 lows, and again back in 2016 we held support all through here, and then in 2018 we broke the bullish trend, and the Fed has basically been trying to keep this thing propped up ever since. So market wants to sell off, Fed steps in, props it up. Market wants to sell off, Fed steps in, props it up. The Fed steps in on these sell-offs. So again, you can see we back tested the broken support from below. That was resistance. And we came all the way up, and this is where we're trading at right now. Basically right there at major resistance. Just waiting for that sell signal. And on the daily, just to continue to reiterate, big negative divergence. That basically just shows that we have negative momentum while price is still kind of hanging in there. Momentum typically leads price. So you see momentum start to fade. You see a divergence in momentum, and then you look for price to start to fade as well. So that's kind of what I'm looking for. Again, we're just looking for breakdowns. We did get that breakdown in Apple, and this is the linchpin of the market basically. So we have a pretty solid breakdown in Apple. Here's your trend line on the daily chart in Apple. We've been walking up that trend line, and there's a sell signal. We broke, gap down. So that's a pretty impulsive, that's a good solid sell signal in Apple. We also had negative divergence, forecasting a breakdown in advance. So this was a divergent high. This was also the earnings. I think earnings reported right in here. And we've been selling off, basically downtrending since earnings. So here's earnings right there. And we've been just moving down ever since. So again, negative divergence was signaling a trend change is likely. We're starting to see that, that trend change take place where we're starting to downtrend. But of course, Apple's the only one that's really broken down. Here's Microsoft still kind of hanging up in there. Just going back on Microsoft, clearly, it's uptrending. We had this kind of trading channel right here. Microsoft's still hanging, way up here after earnings. So nothing negative yet in Microsoft. If we sell off and come back within this kind of, I have it highlighted in blue in this trading channel, the sideways trading range, then that would be a false breakout. But until we see that, it's still bullish. Amazon, you can see they're buying Amazon. This is that whack-a-mole thing that I was talking about, where one of the things sell off and they buy another one. And so Amazon, they're buying Amazon today. So it's just oscillating between these four, really: Amazon, Microsoft, Amazon, and Google. When one of them's down, the other's up. When one of them and that one moves down, the others move up. And so that's what we're seeing, is just this rotation between these FANG stocks. I want to cover KHC. I missed the trade. I missed it yesterday, but here's KHC. The one thing I want you to, this is a daily chart, and we had this big kind of bottoming pattern. I was looking for KHC to come back down to this 25 area and make what looked to be like an inverse head and shoulders. Here's a shoulder, here's the head, here's the right shoulder. Would have been the right shoulder. We didn't get that. Instead, what we did get is this level right here, 36, key level, because you had a big gap way back here from 48 all the way down to 36. And we have never filled that gap ever since back in 2019. Well, you can see what's happening. They're breaking it out up into that gap. So to me, it looks likely that gap is going to fill. Now, they could come back and do a back test, but it looks likely that that gap's going to fill up at 48. So, there's still some, there's still a move there. That's still about a 24% move to the upside. It's just not going to happen all at once. So I would look for some sort of a pullback as a potential entry. Pullback to 36 or so would be good. And, look for the gap to fill. Probably get a reaction here at 42 and then, gap fill. Okay, let's look at the solar stocks. TAN. We're getting a sell signal today. Now we gotta, you gotta wait for that daily close, because there's so many whipsaws in this market where they break it below levels and then the dip buyers step in and recover it. So here, going back to the March 2020 lows, nice clean uptrend right there. If you can't replicate my charts, use log scaling. All right, down here at the bottom right hand corner, I use log scaling for everything. And you can see, zooming in, breaking, it's just not that impulsive yet. So I suspect they're going to try to recover this. But, again, wait for that daily close. The dip buyers are out in force, and they will be there. You have to understand, after a long extended bull market where buying the dip is just the status quo, that's going to remain. It doesn't mean it's going to work forever. Eventually it will fail, and the dip buyers will pay for it. But until it doesn't work, they're going to just continue to do it. So, we have to watch for that. And here's the breakdown. This isn't, it's not that impulsive. All I'm saying is wait for it to get a little more impulsive. Negative divergence there on TAN, on the RSI and the PPO on the daily. So I'm just looking for more movement to the downside. And if we break, we'll probably get a reaction here at about 97.43. We had a slight reaction right there. And then, I see another level that's sitting right about 80, 79.50 or so. Right in, we could tighten it up using the hourly chart. I'm just kind of marking up rough levels. And then I've got this one all the way down here at 57, 58. So we'll just keep an eye on those. Couple components of that TAN run. You can see, run coming off the March 2020 lows. We broke, did a couple back tests, and created the secondary trend line, and we're breaking today. That's pretty impulsive. That looks like it's a breakdown. Down 10% today and pretty impulsive. So, and then let's look at First Solar. First Solar coming off the March 2020 lows. Walking up this uptrend line, we broke, did a couple back tests, and now we're actually breaking. That's pretty impulsive as well. So I think TAN's going to go because some of these other components are going. But again, just wait for confirmation. Let's take a quick look at gold. All right, so I have this green area circle that's what looks to be like a buy zone. Now, I am expecting gold to start to hold support and start to rally in this area. And that's why I have it as the buy zone. It could go a little lower, but I'm expecting some, some strength coming pretty soon. The reason why I'm expecting strength is a couple things. One, if you look at the RSI, let me expand that. We're right at the point where we likely need to start to turn up. We can go a little lower, but we need to start to turn up to keep that bullish divergence. And if we start to turn up in the RSI where it starts to point up, it's going to confirm that bullish divergence. And that would mean that right down in here is a divergent low. So that's why I think this is a good buying area, a good area of support. And, I'm just looking for that to pan out, that for the charts to kind of firm up. I'm looking for the RSI to turn up, the PPO to turn up, and prices to start to turn up as well. And so I've been buying gold miners down in here and just anticipating the market to turn up. Also, if you look at gold coming off, you've got this trend line. Now, it only has 2 data points. We have a data point here and we have the COVID lows right there. So it's not the most valid confirmed trend line, and so we could run down and tag it. We're so close now, we could run down, tag it, or maybe we start to turn up, work our way, and hit it maybe over here further out in time. And if we tag it and it holds and we get a bounce, then likely we're going to confirm that trend line. Walmart continues to downtrend. So Walmart, to me, if you want to know kind of my thoughts on the bigger picture on Walmart, I think this is a big bearish rising wedge on the daily, and it goes all the way back to 2015. We had lots of reactions along this upper trend line and lots along the lower trend line. You can see here as I zoom in all the reactions that we had along this trend line. Then we broke to the upside. Now, Walmart broke to the upside because they floated some news about some sort of online thing. I forget exactly what it was, but it was something, they were playing into the mania of the stay-at-home trend, and they had started announcing news around that. I don't think it's anything substantial, but what it did is it created, this move to the upside of this bearish rising wedge. So this bearish rising wedge is a bearish pattern, which should, 80-90% of the time, they resolve to the downside. But again, you run it to the upside, run all the stops out, anybody that was bearish, then you break to the downside. And that's what I think is actually happening. So you can see we're downtrending. Clearly downtrending. We gapped down today, down almost 6%. And I think we're working our way down to this trend line down here, probably get a bounce or a reaction. And ultimately, I'm looking for Walmart to start to break down to the downside. Now, this is longer term. This is longer term stuff. So it's going to take, time. I don't, maybe it takes a year. But I think Walmart wants to head down to this 85 area over time. On the daily, you can see we had negative divergence. I have it marked out right there. So this was a divergent high up here. And yeah, that was the divergent high that we got. And we've been downtrending ever since that divergent high. Okay, so moving on. So we'll take a look at NEO. I haven't brought this one up for a while. So NEO daily chart, negative divergence right there on the PPO and the RSI. So those are intact. We have an uptrend channel right here, or a trend line right there. Lots of reactions along this trend line for quite a while back here in 2020. And you can see where we're coming down into it now. So we fell right to the, we haven't quite got there yet. So we probably are going to tag that trend line at some point in time tomorrow or so. And then we'll see, the negative divergences are signaling a change in trend is likely, but we need to see a break of this trend line to signal that price is starting. That's kind of the sell signal that price is going to start to trend down as well. So break of that trend on a daily close would be a solid sell signal. Where's NEO go? Well, I think if we break this trend, we're likely to get a reaction right here at 39 bucks, right around there. And then a break of that trend, and I think we're heading straight down to, about 20 to 56 or so. We break that trend, and we've got a gap all the way down here, two gaps actually, down in this $9 and $8 range. So this would, if we're going to get down all the way here, that would be my final target for a drop in NEO. Quick update on this one, SCCO. I let this one go yesterday. The commodities are really strong right now. It was looking good for a short trade, but given the fact that the commodities are so strong and copper's actually pretty strong, I just figured there's better areas to focus on, so I just let it go. I think I lost like $100 on it. Nothing crazy, but we're gonna just look in other areas until this one firms up. This is SCCO, and it did have an uptrend channel. It created a secondary uptrend channel, broke that, and now it's looking like it's creating a third uptrend channel. So it just kind of continues to do that in these waves, and the negative divergence isn't really great on it. So again, it just didn't look that great anymore, so I just let it go. And that's really all I got for this video. I'm going to continue to kind of scan the charts looking for anything. If you guys got any trade ideas or charts you want me to look at, leave it in the comment below. Leave the comments below and I'll take a look, see if there's anything interesting. Otherwise, I'll catch you guys on the next one. Bye.